Well, Steve Saxon is partner at McKinsey Company and leads their travel, logistics and infrastructure practice in China. I put it to him that encouraging passengers to fly all they can isn't very green.
Well, the good news is that the planes would have been leaving anyway. The reason that they're offering these kinds of deals is because capacities come back quicker than demand, and there are empty seats. So these promotions are filling empty seats.
Southern China joins two other Chinese airlines on this all-you-can-fly project, which launched, I think, 3 years ago. Why now?
Well, Q4 is always a relatively weaker time for Chinese carriers, so demand is subdued. And we are seeing the international recovery of demand actually quite slow, slower than I think we expected, and there's still some latency in that coming back. So there are empty seats for the next quarter, and they're looking for promotions to encourage people to fly to fill those empty seats.
And do you think this will continue, or will overcapacity just right itself? I mean, are customers taking airlines up on this offer?
So the offers are popular, right? The benefit for the airline is that they get a greater market share from that particular customer. But it will right itself anyway, because demand is coming back. We expect 2024 to be a strong year for Chinese outbound travel.
What are the benefits, do you think, to consumers in hard cash terms?
Well, for frequent travelers, they're going to save money, right? Because the trips they were going to take anyway, they can now do with a single subscription price. That might even lead to some loss of money for the airline, but that's more than offset by stimulating new customers who are going to be more loyal to the airlines who are offering these subscription programs.
And how will this program boost outbound tourism?
It will. It will encourage more outbound travelers. We've seen outbound travel only at about 60% of pre-pandemic levels at the moment, and that's why there are still empty seats. So especially to the markets where the Chinese can get visas relatively easily, you can stimulate last-minute trips. I think we will see a boost in outbound travel from this.
Q3 results showed major Chinese airlines doing well. Looking to your crystal ball, what's your expectation on the fourth quarter?
Look, fourth quarter is always a weaker quarter for Chinese airlines. Q3 is a peak travel period, Q4 is not. So we'd expect it to be a little lower, but we're optimistic for 2024. We see the big resurgence in Chinese travel coming next year.
In many other industries around the world, overcapacity is simply met by reducing capacity. In the airline industry in other parts of the world by route sharing or code sharing. Is that something we're likely to see here as well, if overcapacity continues?
Well, the Chinese airlines are already doing that. They're holding back the capacity lower than 2019 levels because the demand is not there. But they want to get these flights back in the air. They want to connect China to the world again, and that's why we are seeing empty seats at the moment.
The conundrum doesn't go away, though, does it? I mean, are we in the business of saving the airline industry or saving the planet?
Well, there's obviously a trade-off, right? The Chinese carriers, though, are struggling to get back to 2019 levels because the demand is a little subdued. We've not seen significant environmental arguments in China which affects the demand.
And do you really see signs that confidence among Chinese consumers is returning, or do you sense that there is still that lack of confidence and people are squirreling away money that ordinarily they might otherwise spend on travel?
Yeah, well, during COVID, the average Chinese consumer saved a lot of money. And now, yes, at the moment, the economy in China is relatively flat. And so many areas you see consumer spending lower. That's not true for travel. In our surveys, we find that 40% of people want to spend more on their next travel trip, and they want it to be international.